Okay, hi everybody. This is Jim, the option professor. I'm going to give you a 30-minute spot here where I'm going to explain about the options market, what I see in the markets, and some of the ideas that I think look good right now. Quick background on myself. I'm a graduate of Boston College, and I've been in this area with options for decades and decades. So I've been at the Options Institute in Chicago for training, and I've traded thousands in contracts and conducted hundreds and hundreds of seminars throughout the nation. So I've educated many people. I am going to be sharing information with you today. I'm going to be sharing my opinions and some ideas. But what I'm not doing is giving any advice because, again, these are strictly my opinions and my ideas. Everything to do with your suitability and everything else has to go through your brokerage firm. So do talk to them before you get into anything with options, because options do involve risk and they're not right for everybody. So again, I am just sharing my opinions and my ideas. Okay, with that, let's get started. The S&P 500 on your screen. I'm looking at a 20-year graph. You can see when we had the big drop in April, came right down to my moving average, which also coincidentally was the highs. So I was very keen that that might be the low area, and it certainly was. Now we're way above it here, and we're getting a bit extended from the moving averages. So there is a risk of a reversion to the mean at some point. It doesn't look like it's happening today for sure, but it will at some point, and I'm going to have my antenna up because when it does start to look like it's turning over, and that'll be more evident with the shorter term moving averages, I want to try to make sure that I am not going to get caught in what they call a thunderstorm of selling, which can happen, when something ends up hitting a peak, like it obviously did back in earlier this year. Okay, so that gives you an idea on a shorter term basis. Again, we have a little bit of a divergence up here, 69 on the RSI, and over here the RSI is 64, but that's not very much. Trend is definitely looking like it's still up. We got a nice pullback to 6,200. That was a good time to take a shot at it, and you've already got rewarded pretty good. Now I'm going to explain why I've been bullish ever since May. Okay, first of all, looking at the graph, what was this all about? This was all about tariffs in the 150% range, a possible recession coming, and a whole bunch of nasty stuff that Trump obviously reversed on. And that's why the markets have reversed, because this market was looking for a recession and it was looking for tariffs that were going to just kill the economy. Trump got taken aside by Besant and Lutnick and all those kind of guys and said, listen, if you even go with that more, this thing could really just continue into the abyss. So that's when he changed his tune on how much the tariffs would be. And that's why the market, all these people that sold, all these institutions, all these family offices that dumped stock, they've had to come back in. And it's been coming back in ever since May, and it's still coming in. Okay. Now, what gave me an indication that that might be the case? Real simple. The VIX. The VIX, again, had a big spike in April when the world was coming to an end with those crazy tariffs that he was talking about, right? So this is a explosion to the downside in stock and an explosion on the upside on volatility. But what happened ever since May? The blue line turned down, and we have been dissolving the VIX volatility, which means big money and institutions and family offices are much more comfortable putting their money in stocks when they have a lower volatility environment. And so therefore, outside of this little spike in August 1st, this thing has been more than under control, which means money is flowing into stocks, and it's confirmed by looking at the chart on the S&P. So that's the story. So when would I get a little nervous on stocks? Well, I think we broke that 6,200 from August 1st. That would be something to get very nervous about. And secondly, if the VIX started getting above here, which is 17, okay, actually it's even in the 16. So if we got into the 17s, if we broke above here, which is the well, they're all around 16. So you can see they're all meeting right here. Something big is probably going to happen. Again, either the VIX just continues to collapse or it starts getting above 17. And then the gold line is at 19 and the purple is at 21. So if you get outside of this gold purple range, and if you ever see it up here, something's very bad. And I'm sure it's going under 6,200 at that point, more than likely. So again, you ride what's going on as long as it goes on. But if it changes, you have to be ready to make your adjustments and do your risk management. But right now, with the VIX in this very, very low area, people are more than comfortable coming into the market. And with the S&P, again, showing you the S&P, the trend is very comfortably up. So that's why you continue to see money come in. And again, all that money that comes out, they're still continuing to come in. Now they've come in quite a bit, but I don't know that they come in all the way. And that might be why we could easily go into the 65, 6,600 area. You see 6,600, not that far. Maybe we could do that by September, or maybe by the end of next week if the Nvidia crowd gets very bullish, because Nvidia's earnings come out next Wednesday. So, and then of course Broadcom's come out right after Labor Day. So there's a lot of news on the docket. This week's news is going to be retail, because this week we've got lots of those companies out there who do retail, and those people are all going to be announcing this week. And who are they? They could be companies like Lowe's. And then you've got, well, next week is even more. You've got Urban Outfitters, Five Below, Abercrombie and Fitch, AEO stock. And so you've got Ulta Beauty. So you got a lot, and Best Buy and Gap. So there's a lot of retailers coming out in the next 2 weeks. If they come out with good numbers, that'll be very supportive. If it looks like the consumer's backing off in a big way, then that would be a problem. So I'm sure there's going to be some good stimulus between now and the end of the month to give you some good reasons to either see this thing accelerate towards 65, 6,600, or to have a correction. So you have to stay very alert, because things can change quite a bit. So that's the story on stocks. I know a lot of you guys are in the Qs, so let's take a look at the Qs, and I'll tell you what's going on there. Again, same story, extended, okay, but still looking very strong. And even on a short-term basis here, again, still looking like it's in an uptrend. So again, don't fight the tape. You had your opportunity to get on board on August the 1st. Perfect place. Look at it, right on the line. Bang, right there. Okay, so right now, everything's looking fine. VIX is looking fine. And then if it changes, you got to make your adjustments. The big one that nobody's talked about, and I've talked about, is that Russell. Those are your smaller cap stocks. And I've been telling people, check it out. This thing got in the dumper like everybody else, but once it broke above 200 with all those lines there, boy, that was the time to load the wagon, right? And then we just had a big run through all of this stuff, came back down right to where it should have stopped at 215, and now it's right on the bicycle again. Now, if you notice, the high in 2021 and the high in 2024 are about the same. So is this market going to blow through that level? I would say that there's a possibility of that happening. Again, because the trends have changed a little bit. If we get under 215, though, and then 210, let's look at the numbers again. Yeah, you see this? This is beautiful support, right? Right at 220. So again, we recently came down into that 218 area. That was the place you could have taken another shot. It popped out of there right after August the 1st, popped out of there. But this is a trend that looks like it might have some legs to it. So keep an eye on it. It might be going after that 245 number, which is the former highs. Again, a lot of people badmouth this index because a lot of the companies aren't profitable. They say that the secret stocks like Microsoft, when they were very small, are not in there anymore because private equity comes in and buys them up. But it is a situation where, again, it is an under-owned index, which is not that easy to come by. So, and there's some pretty well-heeled people who think that there's a big future here, especially if the Fed starts cutting rates, because these companies tend to borrow a lot. So keep an eye on it. It's not a perfect world right now, but it has shown the ability to hold pullbacks, and it's had an ability to continue to matriculate higher. And it is something that is undervalued as far as valuations are concerned. I don't know about it's undervalued, but let's just call the valuations are not high. And also it would benefit from lower rates if that were to occur. Speaking of lower rates, let me show you what the story is there. And then I'm going to get into some ideas. Okay, Treasury yields are rising lately. That's direct opposite of the way everyone's betting. Now, why is that? You see, right now on the 5-year graph, can you see it's been holding up here, and the low has been around 418, and the moving averages come in around 423. But I've been using the 20-year graph, and here's why. Last September, rates had hit 5%, right? And we went down to 360. But you notice it never broke my blue line? So while everybody was getting bullish on bonds, I was saying, no way. You should be shorting bonds here because the trend for rates is still higher. Then we had the April nightmare with the tariffs and the market collapsing, and they brought the yields back down right here towards the blue line again, which came in at around 293 ballpark figure. Make that yeah 290. Excuse me, 396, and the low was 388. Okay, so again, we're back here, and to me, if we break above 450 on these yields, 470, people are going to be shocked that yields are rising. So if you get under 420, the recent lows, 412 even better, 390 even best, then I'll start buying the rates are going to be dropping argument. But right now, I don't see that as the evidence showing it. And certainly the PPI going up 0.9, which is almost 10% annualized, wages going higher than the employment than the inflation rate. Wages are rising. You've got full employment. 4.2% is full employment. That's why people aren't hiring anybody, because they already got enough people. Okay, but nobody's getting fired either. Do you notice that? So the bottom line is that there's a lot of people who probably own bonds who would really love to make money on them, and rates have to drop for that to occur as far as the principal. So again, that's where I'm at. And I just look at the numbers. And then if they turn the other way and they do start cutting rates, I'll be more than happy to get on that side of the coin. But right now, since it's 100% betting that it's going to be dropped, that's a lot of people who get hurt if we go up. Okay, so each week on the alert that I hand out, I give you different ideas on things that I like. They're ideas. They're not recommendations. They're nothing like that. I give you an idea of what I think. You take it and you run with anywhere you want with it. Okay. But I'll show you some of the ideas that I'm looking at. And again, these are just some of the ones that I've been talking about on the alerts, which I'll explain how you can get in a couple of minutes. But let's take a look at some of them. This stock here, I already had a nice ride in. It's called Applied Digital. And I think NVIDIA is one of the investors in this. And I just thought that we had a nice formation down here. This is the kind of stuff I like to look for. A little consolidation of the averages, blue lines rising, reds rising, greens rising. This is where I think you're going to get a good pop. And so that's where I was most excited about it. But why did I get back excited about it lately? Because you see, this is, I'm going to show you the 5-year graph. It's a little easier. So you see, this is the former high. And if we blow through this former high, which we're trying to do right now, I think this thing could accelerate to the upside. And the options at 15 and 16 were very low, which means the bet was very cheap. And could I see this thing accelerating to the upside? I could. And that's why I thought it was a good deal. So that's something I was looking at here. The other one here that I had some success with, and then I'm back looking at again, is XYZ. And if you have some questions for me, you can throw it in the chat box if you'd like. Or you can email me at optionprofessor@gmail.com. Okay, so anyway, let's go into XYZ. XYZ is formerly Square. I guess they didn't like Square, so they called themselves Block. Then they didn't like their symbol SQ, so they went to XYZ. You got to keep up with these guys. Anyway, this looks like it wants to possibly go up because, again, here's where I was first interested, right? And we got a nice pop, right? Then it comes back down. It holds the blue line. We got another consolidation here. So it seems like it wants to pop up. So this is something that I'm focused on, and I think it looks pretty good, providing we don't violate that blue line, which comes in at 73.47. So that looks pretty interesting to me as well. Let me pick out a few other ones that look kind of interesting. Well, this one looked interesting this morning. Let's see if it still looks interesting. And that's Nike. And it's a retailer. Now, Nike, again, it had the nice, this is where it was interesting to me originally. We got a nice big pop. So once it has a pop, you say goodbye to it, but then you keep monitoring it. and it's come back down to where the averages are all converged again. You've held the blue line, it's pointing up. So it seems to me that the likelihood of popping up out of here outweighs the likelihood of coming down here. So I thought it was interesting, and I'm glad I'm able to highlight that for you. Keep track of that because, again, on a longer term basis, this is a stock that used to be a lot higher, 180, 130, went as low as 50. And I'll tell you why I loved it at 50. Look at that thing holding my gold line. This is called reversion to the mean. And this is an excessive reversion to the mean, which means when it goes down to this kind of number, you really got to take a look. You want me to show you another example of that? Let's look at Baba. Alibaba. Look at the 1-year graph. Can you see this here in January? Look, it popped up in the fourth quarter of 2024, and it came on a correction all the way down to the gold line. And then you had a convergence of the averages. It doesn't get better looking than that. And then it popped above purple. That's a real good confirmation. And look at that baby fly. Then you just recently what? Came down again. You got it, and then it came down over here. You got to take a bite of the apple if you want to speculate, and the price is down here because you can ditch it if it gets under gold. And look at a rally you got, and look at a rally you got out of here. And then right now you got a convergence. So this thing, I don't think it's going to stay the same. So I see it either breaking out and trying to fill this gap, 135 area, or if it's going to give up the ghost, and if it breaks under 115, it would be in big trouble. So I think I'd keep an eye on Baba right now because I think it'll be a pretty exciting stock one way or the other in the months ahead. Another one that I thought was an interesting one here. Let me just see if I can find another one that might be. Well, this one here is going to be either very interesting or dead in the water. So take a look here on the 5-year graph. It looks like it's consolidating here, and it looks like things want to turn to the upside. And there's a lot of real estate over here to fill in. So the bottom line is I'm keeping an eye on this guy because not all of them have this setup, right? And so this setup is one where you could get significant volatility coming out of it, but it's going to have to clear 160, 165. But if it does that, I think this horse could run. So obviously I'm keeping my eye on it. And they've got their hooks in 5G, and then of course the smartphones. And there's some areas of that like 5G, et cetera, that seems to be growing with the AI boom. So let's keep an eye on Qualcomm because it could be an interesting one to accelerate to the upside. Another one here, Rocket Labs came out, and they're starting to show some signs that they want to get moving. And so again, if you look at the 1-year graph on it, again, a consolidation in this neighborhood and the possibility of coming out of this formation like a rocket possibly. So keep an eye on it. It's got a reasonably good story, and I'm keeping an eye on it for a possible breakout to the upside as well. Bouncing around a little bit here. Let's see. A couple of other things here. Well, PayPal's kind of interesting. I'm kind of looking for things that haven't gone up yet so you can get a premium that's low that could expand. So let's take a look here. Again, we did very well with it in this little rally that it had between 72 and about 80 because it had a little consolidation and then a pop. We got a little pop here for number one, got a number pop here, and then it came way down here. So I don't know if it's going to be able to get out of here, but again, there is a big gap there. So if it were to be able to get into the 70 and above 72 range, it could get going, but it's not the best setup. So I wouldn't really, think it's the best thing, but it would not surprise me if it got a pretty good run. A logistics company. Now that one again, look at the formation here. Does that look like it might want to pop? And is there a little gap to be filled there? So I don't know. Logistics is kind of popular with regards to transportation and trucking and also with AI and stuff. So I don't know. This company may have some pretty good stuff up their sleeve. I'm keeping an eye on it simply because, again, when my averages converge and the blue line's rising, knock on my door, I hear opportunity knocking. Okay, I just popped around to a few different ideas here. And again, there are others because I follow all the markets very closely. And so, what I'd like to do now is explain how you can get my alert into your inbox every Sunday night. Now, again, many of you are either relatively new to options, or you've traded before, or you've traded a lot and you need some help. Either way you are, we have three things I give you, which I think are all helpful. Okay. Number one is when you sign up, you get an options class, 3 sessions, 6 hours, explaining a soup to nuts on options. So you have the foundation of understanding the product of options. That's number one. It's a $397 value we give to you for free when you subscribe. Number two is we give you alerts. Every Sunday night in your box, you'll get a rundown on what I see happening in the markets, both here in the US and globally, because there's a lot going on overseas nowadays, right? I'm talking about Asia. I'm talking about Europe. I'm talking about Latin America, Mexico, Brazil. I'm talking about India. There's a lot going on. And we showed people things like the European banks when they were much lower. We talked about the emerging market stocks when they were much lower. We also had the European stocks as well. Plus, we're talking about Mexico, and we're talking about Brazil that's starting to improve. And India's in a bad shape because they're in the crosshairs of all the tariffs, but I'm sure there's a future there as well. So not only do we talk about the stocks, we talk about gold and oil and crypto. Okay. Real quick thing on crypto. Let me show you. Because a lot of you people have an interest in it. We loved it down here, of course, last in October, but mostly right here last year in the summer. Great time to take your shot. Then you had another shot to take your shot when the markets came down in April. Now you're up here. And again, could we pull back? Yes. Where would we pull back to? Most likely, you should have good support. And I thought it would stop here after it filled the gap, but it may overshoot down here towards the 112. Well, it's near 112 anyway, 112 area. And then, of course, about the 100 grand area. So those are your two major support levels for crypto. So if you get a pullback there and you like things like the Coinbase and the hoods and all the rest of them, that might be a time to price out things if you get a pullback. Otherwise, it could get zooming again for all you know. So again, I cover that as well. And again, you get ideas every Sunday night. You also get coaching. I give you my cell number. You can text me and ask me questions. Again, I do not give advice. That's up to you and your brokerage firm. But I can give you opinions on questions about options because I do have a lot of experience at it. Doesn't mean my opinion's correct or incorrect, but it does have a foundation of knowledge behind it. Okay. And that's very comforting for people who haven't done options before to be able to talk to somebody who they can ask questions about and really understand the risk reward of the strategies before they start doing anything. So again, that's the three things that we give you. We give you the class so you know exactly how the options work. We give you the alerts every Sunday night. And of course, you get the contact to have coaching, which is included in your subscription. And there's two ways to go. You can go quarterly, and quarterly gets you the class, which is worth more than the course at $297, and then basically you get the alerts and you get the coaching, and 90 days for $297. If you want to go annual, you can convert your quarterly to annual after 1 month if you like what you see. That's a good thing too. The annual, I think, is the best way to go. It's $897. These are both discounted $100 right now. So you can go $897 for the year. That gives you 12 months of the alerts. It gives you the course, and it gives you coaching. That's a lot of value there. So I think it's more than worthwhile. I know you guys are being bombarded by this and that and the other. I can't help that. I can just tell you what I can do for you. And so, bottom line is if you've gone elsewhere and you're not very happy, well, then you could try the quarterly because you've been burned elsewhere. I don't know. If you really understand that there's value here and you're going to be doing this for a long time, and a year is a very short time, really, but it's enough to get a lot of foundation for education and ideas and strategy talk, then you put up the 897 as an investment into your future. And again, that's a very small tuition to learn much more about this stuff. And again, not patting myself on the back, but I have done it for a long time and I do know an awful lot about the product. So, and I'm willing to share. So there you go. It's the bottom of the hour now. We have a webinar happening tomorrow. If you're interested in getting the link to that, just give me an email. Option Professor, OPTION, Professor, PROFESSOR, at gmail.com. And let me know. Put your contact information in, and I'll take care of it. All right, guys, that's all I have for you today. I'll be back next Monday after the Timing Research Show. I want to thank David for helping me with this and helping you get the information. Until then, good luck and good trading, and have a great evening.